Today, I want to talk about Trump's government investment strategy and its economic implications. Now, understand this, think this particular topic here would help you predict, and look into which kind of sectors that could benefit from the new strategy introduced by Trump. Okay. Now, first of all, let's look a bit into the history over here, where the government intervention in industries, as in the US government. Now, the past US presidents have intervened in private industries primarily during wartime or severe economic crisis, and usually only temporary. For example, during World War I, President Woodrow Wilson nationalized the nation's railroads under the government's control, though they were returned to private owners by 1920 after the war ended. Now, in the Great Depression and World War II, Franklin D. Roosevelt as administration undertook sweeping interventions, from creating government enterprises like the Tennessee Valley Authority to funding massive industrial expansion for the war effort. Now, in recent memory, the federal government took majority ownership of General Motors, or GM, during the 2008 financial crisis and provided emergency bailouts to Chrysler and Lockheed when they faced collapse. Now, these historical actions were seen as extraordinary remedies for extraordinary times, not as routine economic policy. Now, what President Trump is doing now stands out because it is occurring outside of a formally declared war or a financial meltdown. Trump has pushed the US government to become a direct investor or controlling stakeholder in certain companies during peacetime, invoking national security as justifications for his actions. So Trump's peacetime equity investment. Under President Trump, the government has moved beyond temporary wartime or crisis measures to assert long-term stakes in strategic companies during peacetime. Two high-profile examples illustrate this shift. Number one is the US Steel Golden Share Agreement. Now, when Japan's Nippon Steel sought to acquire the US Steel Corporation, the administration cleared the transaction only after securing a golden share for the United States government. Now, this special share grants the president's veto authority over major decisions by the nation's third largest steel producer, such as plants closure, relocations, or significant changes in capacity. It gives Washington de facto control without contributing investment capital in the usual way. Next is the Pentagon stake in rare earth mining. In mid-2025, the DoD agreed to purchase $400 million of stock in MP Materials, the only domestic rare earth mining and processing company. Now, this made the Pentagon the firm's largest shareholder and included a guaranteed price floor for magnets and other products essential to defense hardware and advanced electronics. Now, it also paved the way for construction of new processing and manufacturing facilities to reduce reliance on China's near monopoly, ensuring the US isn't forced to beg or bargain with Beijing for these resources in the future. Now, does all these new policies by Trump help or hurt the US? Now, Trump's activist investment policy is a sharp departure from the free market approach, and it sparks debate on whether it ultimately benefits a country. A neutral analysis suggests there are both significant potential benefits and notable risks. Let's look at the benefits first. The most obvious benefit is enhanced national security through a more resilient supply of materials and manufacturing capabilities. Now, securing rare earths and steel capacity helps ensure that critical defense systems and advanced industries are not disrupted by foreign export restrictions. Public-private partnerships may accelerate investments in new facilities, create jobs, and foster innovation by reducing financial barriers. And the risks are the heavy state intervention can distort market signals, leading to inefficient resource allocation. Companies may become dependent on government support rather than competing on performance. And the taxpayers bear the financial risk if ventures do not succeed or yield lower returns than expected. Political considerations could influence corporate decisions and discourage private capital in investors fear sudden policy shift or loss of control. Nevertheless, there will be impact on the stock market. Okay. When government signals a willingness to backstop or invest directly into a company, the market typically reacts positively for the firms involved. Now, MP Materials share rallied sharply on the news of Pentagon's stake as investors anticipated reduced downside and better sales prospects under government guarantees. Similarly, speculative gains may occur in other firms viewed as possible beneficiaries of federal partnerships. And you can see the MP Materials have been sideways for some time, leading to the news, and within a very short time, you can see it spiking up already. So for the broader market, this selective interventions, right, introduce a new dimension of political and policy risk. While major indices have so far remained stable, investors will need to monitor how far and how fast this model grows and whether it becomes a standard part of industrial policy. So what are the industries likely to benefit? First of all, obviously, the critical minerals and rare earths remain at the forefront since they are foundational to defense and clean energy technologies. You have also steel and other core materials manufacturing may see additional golden share or equity arrangements when foreign takeover or capacity declines raise security flags. Okay. Advanced defense technology, aerospace, and emerging fields such as AI, quantum computing, and cybersecurity are also candidates for public-private investments if market funding is insufficient. Clean energy components, including battery materials and solar manufacturing, could attract support to counter foreign dominance. And finally, even social media or data platforms might be reshaped under national security prerogatives if they are deemed critical infrastructure. An example is the TikTok. Okay, so nevertheless, look into the future, several possible paths lies ahead. The administration may extend targeted equity stakes or global share agreements to more firms in strategic sectors. So monitor the news, especially critical sectors, and all those kind of stocks can actually push high up due to all these speculations. Success stories such as a robust rare earth supply chain may institutionalize these tools in future legislations, creating permanent fund of sovereign-style investment vehicles. Conversely, legal challenges, political backlash, or disappointing results could limit the practice and prompt a rollback under a different president or Congress. Internationally, the US embrace of industrial policy may encourage allies to coordinate similar measures and could spur a global shift from pure market competition to blocks of state-supported industries. Okay, so the conclusion is monitor those 5 industries for now. Any news related to it, anything that's critical, we might see, the stock moving up in anticipation for all possible investment by the government due to the initiatives of the current president, Donald Trump. Okay, so with that, that's a report for today. Let's move on to the stocks. But before that, I want to do a very, very simple conclusion. Now, for now, Trump has undeniably expanded the toolkits for the US economic policy. As one historian observed, we are witnessing a reassessment of old assumptions that free markets and free trade alone will solve national security concerns. Now, Trump's intervention challenged that faith by showing that in practice, free market can leave strategic gaps. When China quietly built rare earth capacity and then threatened exports, it revealed how easily a single supplier can choke off essential inputs. So he doesn't want this free trade to let it correct itself anymore. He wants to make it happen and ensure US longevity in this economy. So when private firms balk at investing in factories or mines whose payback is measured in decades rather than quarters, critical capabilities can vanish even as overall market prices stay attractive. The US appears willing to experiment with measures not seen in decades, testing how much a market economy can be guided by the hands of government without stifling it. Now, the balance struck in the coming years between state intervention and market freedom will determine if Uncle Sam, i.e. US as an investor, becomes a new normal feature of American capitalism, or is it remain a remarkable yet transient chapter in US economic history? Okay. So that's it for today.